Patrick Findaro here, co-founder at Vetted Biz. In today's video, we're going to go through Caribou Coffee, what you need to know about the cost to open up a Caribou Coffee, how much the franchise owners are making, payback period, where this brand is going. So stay tuned if you're interested in opening up a coffee franchise, and in particular, if you've heard about the Caribou Coffee brand that is expanding in the United States right now. Let's go through a little bit of the history of Caribou Coffee. It was founded in Edina, Minnesota in 1992. So they've been around for a while in terms of corporate as well as licensed location in grocery stores, non-traditional locations like airports. But they really just got it into the franchising game in 2021. They IPO'd on the NASDAQ, but they were brought private in 2012 when Jab Holding Company, a German conglomerate, bought Caribou for $340 million, taking it private. As of the end of last year, 2021, Caribou had 139 licensed locations in the United States, as well as 321 corporately owned and managed coffee houses. So food and beverage, what you got to know, it varies a lot in terms of cost, anywhere from $3,000 up to $6.7 million for the 500 plus food and beverage concepts that we have on the Vetted Biz database. We're going to go through a little bit about how Caribou fits into that, and they have different formats on the low end as well as in the high end. So chalet, cabin, kiosk, specifically the chalet and the cabin operate as standalone. And then the kiosk operates generally in non-traditional space, like an airport, college campus, grocery store even. The chalet is a larger format with dine-in and drive-through, and then the cabin's just drive-through only. Depending on the format, the franchise fee for opening a Caribou Coffee is going to set you back $25,000 to $50,000. The chalet cost to open up is up to $1.1 million. So you're going to pay a lot to have that dine-in, drive-through, bigger footprint location with the chalet model. But if you want to have the kiosk option, which could work well in an airport, as low as $250,000 for a kiosk. So right now they have only the kiosk for their license or franchise locations. And again, there's about 120 of those in the United States. The average sales for the airport kiosk are pretty high at $1.36 million. So not bad. Imagine if you just invested $250,000 or say $350,000, you can expect a pretty quick turnaround in terms of your invested capital. Obviously, it depends how you're running the business and the location, but the grocery stores don't do as well. It's at $260,000 if you're operating in a grocery store. And then when there's a drive-through and you're operating within the grocery store, it's at the $550,000. And that's just for revenue. That's not the profits. So using 2021 average sales across all the different locations that these licensed businesses are operating, you have $630,000 in average sales with a profit margin of 17.5%. That leaves you with about 5.5, 6 years to recoup your initial capital investment. Again, it could be as fast as 4 years, it could be 8 years, or you could never recoup your capital investment as the business failed. It's pretty good for a coffee franchise at 5, 6 years to recoup your capital investment. And this does include the time to scale up, to find the site, negotiate the lease, hire the initial staff, grand opening, break even, and to start hitting that stride in income. So usually that scale up period for a coffee shop is going to be 1 to 2 years before you really start making $5,000, $10,000, $15,000 a month in profits. One red flag to look out, about 20 licenses or franchises terminated in the past 3 years. Need to see why Caribou terminated, or if it was more the licensee that decided to terminate. Do they still operate an independent coffee house, or does the grocery chain operate it under their own label? Those are things to investigate when you're talking to the current licensees, as well as some of the early franchisees that are signing up here in 2022. They had 5 new franchise agreements signed. Last year, they project 15 openings for this year. That's for the franchise units, and then another 46 company-owned stores. So there's a bit of competition from corporate in terms of attention if they're going to focus more on their corporate stores that comprise nearly 75% of the system and it's growing, or the franchised operations. And comparing that to another coffee chain like Starbucks in the United States, very few of the Starbucks are licensed. Most of them are owned and operated by Starbucks corporate. So there's a little competition there in terms, or you could say a lot of competition there in terms of site selection, if the licensees or the corporation gets the best site, as well as preference in terms of training, et cetera, and focusing on the licensees, franchisees, or if the company Starbucks or Caribou is more focused on their corporately owned and managed stores. So definitely important stuff to talk to those initial franchisees as well as the former licensees of Caribou Coffee. The company had an operating income that was pretty good at $65 million on $857 million in sales. In 2020, the operating income was pretty negative, and a big part of that is because you have all those corporately owned and managed stores, so they felt the heat a lot more than some of the other franchise brands that are largely deriving income from the royalties they collect from franchisees and operate at a higher profit margin, closer to 20, even 30% for some of the franchise brands that we've analyzed as part of Vetted Biz. If there's another coffee license opportunity, business opportunity, franchise that you'd like us to review, just leave it in the comment box or shoot me an email at patrick@vettedbiz.com. Thank you.